Welcome back, everybody, to another market day. I'm your designated inquirer. My name's Axel, and today is 8/20 of 2020. Now, the market really does feel like an episode of What's Your Line Anyway, because it doesn't seem like the economic factors don't matter, and they give away points for, just about anything. Yeah. Yesterday, it fell specifically on the word from the Fed, and today it seems to be going up as if it never happened. Just from a technical standpoint, if we go over to the week or whatnot and we start adding in studies, it just looks like it's purely moving on momentum. Some freak show version of momentum that doesn't make any sense whatsoever. I don't understand it. It's completely oversold. It's the second time it's hit over, like, above 70. The last time it actually crashed, it hit 81. Right now we're technically at 74. And the last time before that is, if we take a look at monthly, because we're still oversold, back in 2007 into 2008, which was the last time it went oversold, we were at 78. Right now we are currently at 76 on the monthly. Like, this market is oversold. We were well above, at the steepest it's ever been at 85 back, in February, before actually we were hitting turbulence and whatnot. Back in 2018 we were hitting some turbulence. 2017 we were hitting some turbulence, because this isn't exactly, it's not it's exactly what I've been saying, is this is not sustainable growth. This is not this is not what should be happening. We started to see some of that back in 2014, 2015. When we came off of that into 2016, there was a lot stronger foundation, so the dip that we did see was not that strong into 2016. From then on, there was a pretty decent foundation. Like, they could have been skirting along basically above 50 and possibly below 70. That would be sustainable and consistent growth with momentum being on the positive side. What's going on right now, it seems to be dramatically on tilt. Like, the market seems to be on tilt to the positive side right now. Not listening necessarily to what anybody has to say, whether it's the Fed, whether or not it's economic indicators, whether or not it's I don't know what. That's kind of the problem. It doesn't really seem to matter what you throw at it. The market seems to just go. I don't know. It doesn't, like, if we zoom out a little bit, let's go to the 2 hour. We go out to the 2 hour right here. We are based from the March lows. We have been seeing, if we go out wider to let's go out wider to the 4 hour, where it becomes easier to see more or less what the general uptrend looks like. Here's the dip right here, and as you see it going up and over my head, it has, for the most part, dipped in places, but has kept the general uptrend. We haven't really seen it dip below a major dip subsequently since the beginning of this bull run, or bear market bull run, whatever it is that you'd like to call it. I don't even know what to call it anymore, because it doesn't seem to make any sense whatsoever. But except for here is where it started to look like maybe things would matter here. But then the market seemed to have gotten amnesia. It just decided not to care that we broke support and made a new lower low here. Just, you know, went through earnings and just decided, nah, we just want to go higher, so that the S&P can hit new 52-week highs, so that Apple could hit $2 trillion valuation market capitalization, that Tesla could hit $2,000 per share, that like Nvidia could hit like over like 4 times what it was like in a matter, like in a year or a couple of years. Like, it's, the market has been doing some insane things that even to the best of anybody's ability is having a hard time imagining why the market is at where it's at. But here we are. I'm not in a position to necessarily tell it to go anywhere except for where it's going. All we can do is sit here and try and examine how it's functioning. Even though what the Fed has been doing up until this point has been significant and amazing, what has been substantially more amazing has been, up to a certain extent, been the fiscal stimulus of Congress. But that ended as of the end of July, and which would put us 727.83 about here. The market has no business still moving upward. We're starting to see some of the effects of that cut in stimulus. The executive has yet to put together a vehicle in which to actually be able to pay people directly from the Treasury in terms of their unemployment. There isn't, and Congress still hasn't gotten back together specifically to talk about stimulus. There's still no deal. There's still no like package put together. There's still no consensus, and we're just rolling straight into the elections with basically very little to show for it. And yet Trump just is deciding to make more trouble with China. Hong Kong, for all intents and purposes, is kind of off the map in terms of an economic hub anymore. What happened in Hong Kong before any of this would have alone been considered a black swan event to send markets into a tailspin, questioning whether or not they could trust Beijing into the future with market decisions, because of how they were treating its own citizens, for one, and how they would be treating dissent, etc. But whether or not they could accurately rely on information coming from Hong Kong, because that's kind of partially what let Hong Kong be what it was, is that the journalism and that people could be trusted to say what's going on without fear for their lives or their freedom. More than anything, that's what kind of kept the markets in Hong Kong act how they did. That's basically gone. So that's it's just another factor as to why none of this makes any sense. But I see some traders on CNBC kind of throw up their hands and not necessarily, you know, they're saying the same thing over and over again, that this is all, you know, just, you know, Fed, don't fight the Fed. That's the thing that they say, and somehow that's supposed to make us all feel better, that that's the reason why everything's going up. The other disturbing part about how the market is going up is in this bifurcation, is what they call it. Bifurcation is that there seems to be a rift happening amongst the stocks that are going up the most. Generally it can be defined in terms of what is called the FANG stocks. FANG stocks can generally be denoted as these. If I make this smaller here, I can show you what I'm talking about. Basically these right here, okay? A lot of these happen to be what composes FANG. Tesla would kind of be an honorary member. Apple, Facebook, not eBay, Nvidia, Amazon, Microsoft, Twitter, sometimes AMD, Netflix, EA. All of these stocks are what would kind of just be considered the top tier of what the Nasdaq has to offer. Most of a full almost 30% of what the Nasdaq in terms of market value is encompassed in just maybe 4 of those stocks, including Apple, Facebook, Amazon, and Netflix, and maybe Microsoft as well, and Nvidia. Like that, those 5 or so companies can basically rip the market by the hair up into the stratosphere by themselves, along with a few stocks in the Russell, in the Dow, being Home Depot and a few other like Walmart, Target, etc. Some of these places are things that that would be, you know, for the exception of maybe Walmart, a lot of these places produce products that people in what would be considered the middle and middle upper class can afford. Places like Kohl's, which generally caters to lower middle, and lower income families, they've seen the drastic change between what is working in the marketplace. They've seen that basically since stimulus had stopped flowing, that they've seen a decrease in sales. But everywhere else seems to be doing fine as far as what they've been reporting. The ones that have seen positive earnings, etc., those are the ones that have generally been catering to middle upper class and upper class families. Of course they're doing okay. They didn't need the unemployment like enhanced stimulus to begin with, and or the stimulus for that matter. And when I hear things like, oh, well, as people stay home, they're gonna keep refurbishing their homes and upgrading them, who specifically has the kind of money to be upgrading their homes indefinitely? Generally you would see like maybe an upgrade, like a couple things here and there, but not like major remodelings and things of that nature, unless you've got money specifically to flip a home, or if you're planning on selling your home in the next couple years to move on to the next project house or whatnot. Like, it's really difficult to put into mind that just regular families have enough money to just burn on a home upgrade. And so I don't know how sustainable this type of behavior can be, especially considering that some of these upgrades are probably just going to be a one-time deal. Some people may be putting together a home office, some people may be buying a computer, etc., to go to school or to have a home office, etc. But again, most of these types of actions were basically emergency expenditures that maybe a consumer decided to take on because of the emergency that we've all gone through, which is the coronavirus. Apart from that, trying to do that year after year or month after month or quarter after quarter doesn't seem to be in the cards. It seems to be a single time expenditure that people would have needed to make. In terms of the next stimulus or future dollars, it's hard for me to see people continually spending when they don't necessarily see easily found work, or with basically 27 million people unemployed looking for work, it's difficult to see a way out and to see how any of these types of consumer behaviors are sustainable into the future. But here we are, and at least that's what the market is, is pricing in. I specifically heard that it could be the case that the economy can be further widespread, that these millions or hundreds of thousands of small businesses going out of business are no longer going to have enough money to even buy ads through Facebook, etc., and that's going to later on reflect in their earnings, and then those stocks will fall. Of course, that's going to be the case. This particular financial advisor and or trader that's on CNBC said, and that's not necessarily something that the market has priced in at all. It seems to be evident that that is completely the case, that they are not taking into account any sort of downturn whatsoever from this point forward, even though unemployment today did go up. Those filing for unemployment went back up above the million mark to 1.11 million people further seeking unemployment, up from the 900,000, which is still a terrible number, but still last month it caused a rally because it was still the number got better. It went below a million. Now the number went up, and yet the market persisted. That's what seems crazy about all of this. Nobody seems to actually be taking anything into account. Simply because it's going up, simply because we have momentum, this seems to be the only reason, and a good enough reason, to actually keep moving forward ad infinitum into the stratosphere. When the Fed, if they go to announce their long-term plans, etc., for quantitative easing, etc., whatnot, from when it sees itself putting together a function as to when it would start to ease monetary policy, of course, now the number is going to go from unlimited, basically, Fed funds to a limited amount of funds. Then people are going to have to try and put together how and where the stock market is going to fall, how it should function. Up until this point, I've seen numerous people basically say that because the Fed has not even mentioned when it would start to ease off of the Fed injecting liquidity into the market, because it never said that it was going to stop, they assume, and they're basically taking into account, that the amount being injected into the market is an unlimited amount, which is inherently false. By the time that we do get out of this or whatnot, the amount that is going to be injected into the market will be a finite amount. For them to be producing models, etc., and or projections that say that it's going to be an unlimited amount is grossly negligent, in my opinion. But again, here we are. Let's see here. From what I can see, the way the market has been rising as of recently, it seems to have still incredible strength. When it moves up to another level, it doesn't immediately drop the way, if you were to flip this chart around, that you would be able to see in terms of to the opposite effect. Because when the market is in a state to move upward, the movement down is sharp and drastic, and it recovers sharp and drastically also. The movement upward is not categorized in the same way, in that it'll move up, but it'll maintain that altitude more or less for a good while before it decides to move up further. We saw this type of behavior basically closer to when it kind of decides to move lower. So when the market cannot sustain a move upward, it'll kind of tell you. Let's go ahead and remove all studies, because it'll move up sharply, but then it'll also drop sharply as well. The movements will be as extreme to the upside as it is to the downside, generally. In this case, though, it ended the day on a very sharp upward movement, and the market in the aftermarket has relatively kept those prices. So we're seeing a very strong rise, and prices being maintained at a very high price, which can kind of be characterized with how Tesla rose today, where it basically rises sharply, maintains a level, and then rises sharply again and maintains that level, instead of doing what it kind of did last time around, where if we go to 2 hours or so here, last time around it went up sharply, but it could not maintain those prices for very long, and so it dropped almost just as quickly. This time around, it basically rose and it stayed at that high price. So it most likely is signaling here that not only is it reaching a new price, but it can probably stay at that price also, which is from just trying to make sense of it all. It doesn't make any sense whatsoever as to why it's going up, but it's doing it. From a technical perspective, it makes sense. It just doesn't make any sense whatsoever from an economic perspective, because there isn't something that would tell me, yes, I see all these reasons why Tesla would still be going up. It's very befuddling. In any case, yeah, that's where we're at. Hope you guys have had a good Thursday. Yeah, that's basically everything I got to say. I hope you guys stay safe, stay healthy, and until next time, take care.